Good afternoon, Scott Bartlett, T3 Live. Welcome to today's recap. Just so you know, it's only 2:40. It's not 4 o'clock, but it is Friday. It's been a long week, and I got to get going. Next week's the holiday. I got to go out to the supermarket, get all my fishies, and get ready for a big Christmas Eve dinner. You know, I have a nice Italian wife, even though I'm Jewish, so I get to benefit by celebrating both holidays. But anyway, with that being said, you know, hopefully everyone's doing a little bit of celebrating, you know, in any which way they feel comfortable celebrating, because it's been a heck of a year to celebrate. You know, it's been 2013, has 1 week left. The indices have made major moves. You're talking about 25% plus in the S&P. NASDAQ's a lot higher. World indices also, you know, participated. And then we've had stock participation. We have all-time highs. We have 2013 highs. You know, for every different time frame that you navigate, there's been something for everyone. Whether you're a macro investor, an intermediate investor, an active day trader, and hopefully, you know, if you're in our community and you've been here for a while, you've learned how to, you know, put together the three of them and then really make some nice progress. The only people that are probably not making progress are the ones that have opinions, those that like to just be short, even if the market's not telling you to be short. You know, but there are times for that, and there are times when the market doesn't act well, and we'll be there also, neutral to negative, shorting stocks, going the other way. But when the market action is strong, when you have breakouts being supported, and you have moving averages curling up, and you have us above the 821, and you see commitment to a massive move on Wednesday like we did yesterday, there's no reason to fight it. And if you've been wrong all year, okay, it is what it is. Get past it and get yourself on the right track. With that being said, again, it's 2:40. I'm going to go through the charts. You know, we saw a great move on Wednesday. And I know on Wednesday, even me, going into Fed meeting, I think I was flat. For compliance purposes, I want to make sure I had almost nothing on, whatever it was pretty immaterial. And then what took place? Let's show it up right on the chart. Well, first of all, here's the, you know, the trend that's been to the upside for the majority of this 2013. And then this is what we've been navigating lately. And we went into the Fed meeting not knowing what was going to happen. You never know. But what did we have? We had a plan. Were we going to come off on the taper, you know, on the tapering of the 10 billion reduction, you know, touch the 50-day and reverse? That was the potential plan. And what took place is that. And this was a massive red dog reversal, massive outside day. So if you trade for P&L, you trade for alpha, this was your signal to get involved. You could have gotten involved when it recrossed back above this 1772. Or if you wanted to wait a little bit for commitment, you could have got involved once we crossed above 1792, you know, or even yesterday, you know, or, you know, we closed strong yesterday, we digested. If you said, listen, I'm really not comfortable, I want to see commitment to this massive wide range engulfing bar. You saw it yesterday where we held the top third. I showed you those Fibonacci retracements. Top 25% held, that means we probably go faster. And then this is what today brought us. 1823, new all-time highs. What does new all-time highs mean? You know what it means? New all-time highs means that if you started investing in 1986, the year before the crash, in 1987, and stayed the course every month buying S&P funds, you survived the devaluation in 98, you survived 9/11, you survived the financial crisis, and here you are with a great average cost doing well. If you were someone in your 20s and you started working in just say 2004 and you started putting monthly money in, you know what, and you did it before the financial crisis, oh my goodness, you know what, and you didn't bail, you probably have a great average cost, you're at all-time highs, and you're doing well in your macro account. So push comes to shove, people are like, oh, if I'm not involved in the market now, can I buy it here? You know what, in 5 years from now, we might be lower, but in 10 years, 15 years, we probably will be higher, and you have to develop a macro course. But really our sweet spot here at T3 Live is navigating the intermediate trends, kind of like what we saw this week where we weren't sure if we would hold up here heading into year end, but by looking at the technicals of the market, we were able to reposition. If you go back to the chart, I know for myself, you know, I was pretty flat coming into this area not knowing, and then, you know, was able to put on some risk within this move, and I still have multiple positions you could see on the virtual trading floor. Now, lots of stocks on the move. You know, you look at, you know, I talked about the race to 1100 between, you know, actually the race to either 1100 or 400 between Amazon and Google today. Google's almost there. You know, this, you know, the gap up after earnings gave us a lot of indication that this move could continue, and we've seen really nice continuation above the 8-day moving average for the majority of the time, and there you are right there. Lots of nice trades along the way. I remember this one right here. I remember that one. Anyway, if you're a macro investor or a trader, there's been a lot to like with Google. Amazon got to 400 before Google got to 1100. I just grouped them together because we talked about two different stocks, which I'll get into. Here, there's two. Really nice trend, hugging the 8-day moving average for the majority of this move. Nice break above 400. Stopped once and then continued, and there you go. If you're a stock picker or investor, this stock has been a multi bagger. And then if you trade it like we try and trade it, lots of areas for cash flow, looking strong. Trim and trail. It's not giving you a clue not to hold some. It still looks good. The reason I talked about the two of them together, because I think 2 weeks ago I talked about the race to 50 between Facebook and Twitter, because both looked like they were ready to go up, and you never know where they're going to go up. You measure them along the way. And not only, I remember that day, Twitter got to 50 first, but not only did it get to 50, it continued, and Facebook didn't do too shabby itself, even in the face of all this secondary talk. So with that said, you go to Twitter. Really nice move. Most people weren't ready for it, and even if you weren't ready for it, then it didn't matter. It gave you multiple areas or multiple times to get involved. Here is, I remember talking about it in the morning note. Hopefully you read it. This is when it crossed above 42. You could have gotten long there or at least covered some shorts, and then you had a small inside flag right here that continued. Here's when we took out the pre-IPO highs, which is always bullish. And then we had caught a nice little cute short here. You guys remember this? Okay. I only stayed for a day and a half, and on this day, everyone's like, oh, Red Dog, you always take your trade too early. I'm like, you know what? I was only looking for a cute trade. P.S. wasn't doing anything with it then yesterday. Got back involved in Twitter, but this time from the long side. Okay, took it home. It's still in the VTF, and as I look right now at around 245, looks like it's on its way back to continue. All right, when companies come public, it's about supply, demand, and technicals, not valuation. And right now, this is on the move. Still looks good. If it closes anywhere around here, I'm going to continue to take it home, and I'm sure, or hopefully Barron's doesn't have it on the front cover, calling it overvalued like they did Facebook at 15. Great job, guys. Dropped the ball there. But anyway, looks good. Facebook also, in the face of Zuckerberg selling his shares in the secondary and even going into the S&P, we talk about this pattern. We talked about it. I talked about it with Kramer, the whole cup and handle pattern, which is unbelievable. It's an accumulation pattern. So for an investor for this year, if you were in there, on this pattern, and then here is your descending channel, boom, 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 all the way up. If you waited till after earnings, until after it took out this resistance and acted really well, and you didn't want to get involved prior when it didn't know whether or not it would actually get going, this was your good spot, and you still could have made money. You go to the daily chart, that was this gap up, and now it's looking pretty good again. You look at this chart, it's above the 8-day, wedging, big time secondary, and I think it's because he's got to pay taxes or whatever they're attributing to it. I'm sure he's got a hell of a lot more shares, but the longer it consolidates here and stays like this, the higher the probability it probably goes again. People think after today the demand will be done for this stock because it'll be added. We shall see. As long as it stays above the 8-day, I would stay somewhat bullish on Facebook. Apple, it's been a little wishy-washy, but right around here it's holding up a little bit better. We've had some really nice action in Apple since the summer. I still think it's in the game that it could continue again. This is when it changed complexion after that earnings. Remember that big gap up right here and held. Here was that retest. Here was one tight pattern that ignited to the upside. Here was that Thanksgiving awesome pattern that ignited, and now it's been consolidating again. Still holding the uptrend since the lows here over the summer. Still looks pretty darn good. I am back involved a little bit. I'd like to see it close. Right now looking something like 550. I'd like to see it close around here. It's still holding the 21-day. And then at some point for it to get better, it really has to really take out 562. So I think it's a B trade, not really much more than that, but I'll try and stay in it as long as it stays above this trend. If it hovers and closes above, I think like that 548-ish, I'll probably take it home regardless. For some reason my guts tell me to be long this next week, so we shall see. If you don't want the risk of the stock, maybe do a call spread. Triple D and the 3D printing stocks, we've been talking about this all year at different times. This was your last play. Boom, look at that breakout. Poked its head out yesterday, follow through today. You look at groups together, SSYS, powerful move. People were talking about when Triple D went, oh, what about this one? And then there you go. If you want a little bit of the tail, the tail that wags the dog, here's this little ONVO, nice wide range bar, a lot more speculative than the other ones, but maybe it gets back to 10-ish or so. Groupon people were asking me about. You guys want to know what a day one looks like? Well, remember when we talked about this day one? Day one was right here. Woke it up. You never know what's going to happen after a day one, but look what happened. I think Off the Charts had it right here when it showed commitment to this day one, and now look at it, still acting pretty well. Lots to go on there. And then you have the banks. So the banks acted really well on Wednesday. That's a group that I went with. I think on Wednesday I bought Goldman and Bank of America, and I still have both. Yesterday I nibbled on C to play a little catch-up, and I think they're not participating today, maybe because of some concerns on what's going on with the credit crunch in Asia, or they're just resting. You look at Goldman Sachs, look at the chart here, still looks really good. We talked about the strategy when it was going to break above this 170, 172. There it is, acting well, flagging again. Maybe it's got a pin 175 for options, but then if it creates another bull flag, perhaps it continues to 180 next week. Bank of America, a little lethargic today, but not really that. Oh, actually, it's coming back up. Look at that. This was your igniting bar that we've been waiting for. It's now holding higher, looking good. I think next week comes into play the 16 area, or maybe first few weeks of January, but ultimately nice action here. I've been coming back to this stock many times this year. This was the last igniting bar that led to this move. Here's another igniting bar. Now it's acting pretty well. So with that being said, I wouldn't get too worried about it. And let's see Citigroup. Citigroup starting to perk up a little bit. At some point next year, or maybe before, you have a long channel here. All right, got involved yesterday. It's looking like a little perkier. Last time we tried it here, it failed, got out of it. Trying it again. Maybe this time it'll have enough energy to bust through this long-standing resistance. If you go really to the monthly and you look where Citigroup is, it really has done nothing, because remember that split it had to do? So people are like, oh, it's a little expensive. It really isn't. People forgot that it did a split. Like, this stock has done absolutely nothing for 5 years. So if it were to get going, it could be a runaway train. So we'll see what happens. But all in all, this is that area that's going to have to get through. And, maybe you can catch a middle, being long a little bit now and then getting confirmed if it were to get above this area. So, Wells Fargo looks higher, but I'm not even going to get into that. And then, some ags are perking up a little bit. Gold bounced a little bit today. But usually, the same thing has been going on, is that there's been nice rotation, tradable patterns, 1 to 3 day moves of 4 to 7% if you want to take it like that. There's also been scenarios where we've sold them way too early. I talk about trim and trailing. I've trimmed and trailed myself out of so many good positions. A lot of people talk to me about my thesis. They're like, wow, 2013 was pretty great. You picked 7 stocks or so with countries, and all of your targets were filled within the first quarter. I should have just did that and not even traded. So there's a lot of interest around what we're thinking about for 2014. And at this point, I sat down with John Darcy, the editor-in-chief, and we talked a little bit about what took place this year, maybe what took place the year before, what strategies we use to uncover trends, and what strategies we use to pick winning stocks, and how we put ourselves in positions to feel comfortable to stay with trends and then measure the composure for changes. So today, after the recap, make sure you stick around and watch the first installment. It's going to be me and John discussing strategies and a little bit about what went on technically in 2013, and maybe even a look ahead. And we're actually going to have eight different segments before we release 2014 thesis. Okay, and with that being said, it's going to be paid for the 2014 thesis, but we're discounting it for anyone that buys early. So with that being said, watch the first installment. If you happen to make good money reading 2012 and being involved in 2013, I do think there's a value here. We're going to talk about a lot of our strategies, talk about what we're thinking. You could, get a nice early look at it and get with it. So in my opinion, I think it's a great deal. So tune into the first installment after this. As you can see, I have a little company here. That's not Brittany or John. It's a little mini red dog. You gotta love Secret Santa. They can make anything in this world, and now, unfortunately, there's room for 2 big heads. That head's pretty darn big. Who needs to see 2 big heads? But anyway, it's pretty funny. So with that said, you gotta have a lot of fun. You gotta laugh. Life's too darn short. I like to take a little glass half full approach. I like to be positive, because negativity doesn't get you anywhere. There's been a lot of negativity from a lot of bears out there, a lot of gold bugs out there, all people who didn't want to see what was going on and just wanted to think about what they thought should go on, and that's not a way to run your approach to the stock market. You got to be dynamic, you have to be even keel, you have to have a balance, you have to have a system, and hopefully we help create that with you. You feed off of us, you feed off the community, and you figure out where you can live, what system best suits you, and hopefully, we lead you in that direction. You can watch the videos that are going to be going out every single day next week and get an early jump on 2014. Hope all is well. Have a great weekend. See you Monday.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.